Good morning, everyone. Welcome to Friday, the 29th of March. My name is Chris from Skilled Wealth on behalf of the Money for Life programs. I hope you've had a fantastic week. I know I've had an extremely busy week myself. Been doing a lot of coaching sessions with clients throughout the week, talking about not only their trading styles and the sort of trades they've got on in the marketplace. We've had a couple of clients that have decided for the first time to get into a different type of trading strategy, and they've been very successful taking on board the training that have been provided to them, following that up with good quality coaching and mentoring, and they've seen the rewards at the end of the day. They've reaped the benefits of their hard toil in that they've actually made a profit in a very short period of time on some of these trades at a 20, 30, 40% return on risk, which is a fantastic position to be in. Like everything in life, it's steady as she goes. We go through a phase where we crawl and then we walk and then we run. And for a lot of the clients that we're working with at the moment, we're going from that transition period of crawling into walking. And like everything in life, things can be a little bit nervy. But at the end of the day, for those of you who've been following through with my market updates, you'll understand two different numbers that I gave you that we were looking at this particular week. Just to recap, and we'll have a look at the charts in a minute, but in terms of what we do with our trading, we're very much using one of the ETFs or the indices in the market as an indicator that gives us a little bit of a direction or an understanding of where the market is going. And here's a quiz for you. What is the name of the ETF that we use, that we follow, because it generates a direction that 75% of the market follows? Can you remember what it is? That's right, S&P 500. Well done. So we follow the S&P 500, the SPX as it is, so that we get a bit of an understanding as to the direction and the volatility in the market. More importantly, we want to see what direction that it takes. And why is that important? Well, as I've said, the S&P 500, the direction that it moves, 75% of the market will move with it. And if that's a great indicator, if we can see what the futures market is doing, which is a direct reflection of the S&P 500, then we can get a bit of an understanding before the market opens and whilst it's trading as to what is going to happen next. Okay, one of the clients said to me during the week, it was quite an interesting question. It was more of a statement at first, but it turned into a question. She said to me, I don't understand how it is, Chris, when you're doing your market updates and when we're doing our coaching session on a daily basis, you always know what's going to happen before it actually occurs. Are you a psychic? Well, of course, the answer to that is no, I'm not. But what I am is I'm very experienced in understanding and reading the signs that are occurring in the marketplace at the time. More importantly, I'm using information that's available from the global market rather than just looking at a very foveal view of what's happening in the New York market at the time that it's open. At the time the market's open in the New York Stock Exchange, we call that the cash market, okay? Because we as mere mortals are able to trade, we can buy and sell shares, we can trade in options and the like. But there's actually a global market, and in terms of where we are here in Australia, we're at the leading edge of the day's trading range. And what I mean by that is that if you think about it in terms of the globe, well, think about the Earth. We all know that there's an international dateline and it occurs just on the eastern side of New Zealand. So as far as we're concerned, the very, very first markets that open up on any particular day, Monday through to Friday, starts off with obviously the New Zealand market. And then as time ticks along, we get across into the Australian marketplace. That also means that we're getting the market open in Tokyo. And then as we're moving through, progressing in terms of time through the day, we get the Asian markets opening up. And they all trade the same types of stocks and shares and ETFs that occur on the New York Stock Exchange. So we actually get to see the way that the first part, we actually break the world up into three separate parts, if you like, or three separate regions, where we have the Asian market that trades first. And you will hear this if you're driving along in your car, you've got the radio on, the news comes on, and they talk about the finance report, and they say the futures market looks like the Australian market will open higher, based on perhaps the Asian market. Okay, or they'll say that the futures market's looking down today, and you think, well, how can that be? You know, the market hasn't opened yet. But in reality, the market actually did open very, very early in the morning, okay, and has been trading from a global point of view right the way through that period of time. As a matter of fact, the futures market, the global market, trades pretty much 24 hours a day. There is a period where it does actually shut down for an hour or so, but as far as we're concerned, in times of time continuum, it really does trade for 24 hours a day. So we have the Asian market that trades, and then obviously it closes towards the end of the day, and there's a little bit of a lag. The market's still open, but there's a little bit of a lag that occurs, and we get the European markets open up. So that means that we get certainly the Russia side of things, we get the Swiss, we get the London exchange, all of those exchanges are open up, and that's called the European time. So we get the European trading, and of course they're taking a direct move off what's happened in the morning sessions and the early part of the day through the Asian session. So we trade the Asian session first, then we move into the European session, and part way through the European sessions, when the markets are opened up in Europe, the American market opens up. So you actually have two very, very large global regions trading with an overlap in around about the same time. Of course, part way through the New York or the American trading day, the European markets shut off, and then of course the American markets continue to trade for the remainder of the day, and we have that continuum. Now there's a very short window where there's no markets trading at all. Everything takes a little bit of a closed position. But then, of course, we get back into the Asian market. So the global market itself really is something that we must consider, rather than just having that tunnel vision, that foveal view of we're just trading one particular market. We need to understand what's happening in the global market, and that's why global news has such a large influence on the marketplace, particularly in terms of the trading that we do as well. So I just wanted to give you a bit of an understanding and a background as to how it is and what the big picture is in terms of the trading. A lot of people say to me, "Oh, Chris, look, I can't trade because I'm just not going to sit and be at the computer all night. I've got to go to work during the day. I can't afford to be sitting and trading at night." Well, neither can I. I mean, I spend all of my time during the day coaching people on a one-on-one basis, allowing them the opportunity to learn from my experiences, and I can't afford to be sitting at the computer all night as well. And the best part about the trading that we do is we don't have to. There are things that we can do and put in place. We can place the trades before the market in the US opens up. We can then allow the market to do the trading while we go to bed or go to work or whatever the case may be. Then we can come back and have a look at it once the market's closed, see what the positions are, and then we can use some of the strategies and techniques that we've got to manage those positions. We go through a process called place, review, monitor, where we place the trade, we review it afterwards, and then we put in place some strategies to manage those trades, and then we simply monitor it through until their conclusion. And hopefully the conclusion is that we've made money, and that's the most important thing. So I just wanted to give you a bit of an understanding of the background. You don't need to be sitting at your computer all the time to do these trades. This is very much a lifestyle issue. A lot of people say to me, "Oh, Chris, look, again, I really just don't have the time." I get it. There's a lot of people out there who don't have time to do the sort of things that require you to be there, like, for example, a second job. Some people say to me, "Well, Chris, I really would need a second job. I need that additional income." Well, you probably do. But at the end of the day, do you have the time? Are you going to go and work for 8 or 9 hours in your first primary job, and then go and work for 2 or 3 hours in your secondary job, and literally work yourself to death? That's not living, that's existing. What we do is we supplement income. We have the ability to create cash up front immediately from the stock market without the need to spend 3, 4, 5, 6, 7 hours in front of a computer every day. Literally, for less than 20 minutes a day worth of trading and monitoring, we can make this process work. That aside, let's have a look at the markets and see where we are right now. I'm about to show you what happened during the week, where I think we're going to end up, and the two separate figures or numbers that we were talking about at the beginning of this week. Let's check the markets now. Okay, so you can see here we've got the the SPX, which is the S&P 500 chart, and at the moment it's currently trading at 2815, came up 10 points last night. And if we have a look at the chart here, we can see again from the December period, it's been a nice big movement upwards, okay, which is what we've been pretty much looking at for the last couple of months. The last week or so has been the interesting part because we've been tracking pretty much sideways. And again, for those of you who've been following along with the market updates that I've been doing, we understand that this red line here, this horizontal line, represents our point of resistance. And that mark has been sitting at between 2815 and 2820. And we can see that last week we actually traded above those levels, which was fantastic from our point of view. We expected the value of the S&P 500 to continue trading up, and in doing so would retest the highs that we had back in September of last year. As it turned out, that wasn't what happened. The market decided that it really wanted to retest that resistance level, as we call it. It's come back down below that level of 2815, and for this week we've been pretty much tracking sideways. Now, the very first number that I gave you at the beginning of the week was what we call a pivot number, where it's where I really expected the market to really be moving around, moving up and down. So pivot meaning obviously the point, or the fulcrum, if you like, where the market will continue to fall down, come back up and touch that point, continue past that level, come back down, hit that point again. And those points have been, or that particular point was about the 2814, 2815 mark, which is the point of resistance. Okay, and if you have a look at the chart, if we can actually just zoom in a little bit here for you so that you can see what's going on. Okay, we can see that all the way along that red horizontal line, we've been pretty much hugging it, moving up and down, up and down, up and down, and that's where the market really has been testing that point where it doesn't quite know if it wants to go higher, but it's certainly not going to go lower. Okay, and for our perspective, again, because the S&P 500 literally is 75% of the market direction, okay, we've been seeing the market going sideways. Now, the other number that I gave you at the beginning of the week, for those who've been following, was 2845, and that was the number that I expected the S&P 500 would hit by the end of this week. Now, you're probably looking at yourself going, well, Chris, at the end of the day, you're only at 2815, so you're 30 points off. And you're absolutely right. As of today, without trading tonight, we're not quite there at the end of the week yet, but we're a little bit shy of that 2845. Well, one of the things that we've got on our charts here is what we call an average true range. And this average true range actually is, over the last 14 days, averaged out the range of the shares, what they move on a daily basis. Okay, and we can see here that this little red line down the bottom actually is indicating at the moment about 28 points a day, 28 and a half. So by that reckoning, if we have a good night tonight, which is what I'm expecting the next session to be, is a very positive end of the week. If I add, let's say, 30 onto the 2815, that takes me to the 2845 mark. Now, of course, we're going to be a little bit shy of 30, all things being equal. So we can probably expect the value of the S&P tonight to potentially come up to sort of the 2840, 2845 mark. Okay, if it did that tonight, I'd be a very, very happy man, particularly with the type of trades that we've got sitting in the market at the moment, and the clients that I've been working with right now would make themselves a fair decent amount of money. Okay, and that's exactly what it is that I'm expecting to happen tonight. Now, coming back to the story I was talking about, the young lass who was asking me, how do I know that? Well, I don't know definitely what the market is going to do, and for those who've been following me, you'll hear me say this all the time. We need to wait and see what the market is going to do. However, if we were to have a look at this chart, which is the E-minis or the S&P 500 futures, okay, and these are trading already, because obviously the time factor, going back to the beginning of the session I was talking to you about the time zones, okay, at the moment the E-minis are trading at 2827, and they're already up 6 points at the beginning of the day and rising. Okay, so I can see here that in the beginning of the global day's trading, we're already heading up. And I know that the E-minis, being the futures, is a direct reflection of the S&P 500, which is this value here. We can see that whatever happens in the futures market, it'll happen here first, then it gets translated into the actual cash market, the 2815. If we're already sitting at 2827, this is at 2815, all things being equal throughout the remainder of the day, and this can only get stronger and stronger, the market, if it was to open up right now, the cash market would open up significantly higher. Now, if we get that continued movement, keeping in mind that I've been saying the resistance line is between 2815 and 2820, and the pivot point was at 2814, we're already above the pivot point, we're already above the bottom of the resistance level, and we are now above the top of that resistance box as well, which really means that for tonight, at the moment, as far as we're concerned, it looks like it's going to be an extremely positive night. If we can get the S&P 500 back up to the 2845 mark, then it won't be long before we're sitting at 2900, and that can very, very quickly happen, particularly if we get some good news coming out of the US about the trade deal that's being done between it and China. Now, if we know that beforehand, we can go into the marketplace right now and place some strategies that's going to make us money as the value of the market rises. And the beautiful part is that these are not long-term strategies. These are strategies which can be as quick as one day, certainly can be out for a couple of days. We can go out a week, a fortnight, or even a month. But at the end of the day, we're going to be making money immediately up front, and we're going to be doing it in a safe manner. We're going to do it so that we control the market, not the other way around. That's my update for this week. Thank you very much for being with me. I hope you've learned something. It's all about education. That's what I'm about. I'm an educator, a coach and a mentor. I push people to learn. You need to invest in yourself. You need to take responsibility to do the right thing by yourself and learn about things that are available to you in terms of making money. The stock market is but one avenue that you can use, and I'm more than happy to help you if you decide that you'd like to speak to me and just have a discussion about what it is that your outcomes are possibly looking towards and how we can help you get to that level. Enjoy your weekend. I'm really excited about tonight. 2845, remember that number. That's what we're aiming for by the close of the market today, 2845. If we can see that the futures market stays above the 2814 mark today as we lead into the market opening tonight, 2845 is very much on the radar. Look after yourselves, stay well, enjoy the time with your family this weekend, and I look forward to speaking to you next week. Bye for now.